Investor conference starts today, and to talk about that investor conference in detail, let me now bring on board Sanjeev Prasad, Senior Executive Director, Co-Head, Kotak Institutional Equities. Morning, Sanjeev, always a delight to have you back. Sanjeev, you've titled the current conference as Chasing Growth. So what's the message and signal you're trying to send across to your clients? Time to sell defensives and time to buy growth-oriented sectors and stocks?
Oh, this title we have had for the last few years. The idea is, India is ultimately a growth market, and, accordingly position your portfolio. Having said that, over the last 2 years, this growth is being, proving to be a little bit elusive. So I guess, all of India, including the government, needs to, get its acts right and, getting back India to a higher growth trajectory. If you're looking at about 7% this year and lower next year, that's not, I would think, the right growth for India to meet the aspirations of the people. So clearly India as a whole has to, get its entire framework, regulatory structure, governance issues sorted out for us to get back to a growth trajectory of 8 to 9%, which I think is desirable for a country like India.
Sanjeev, hi, morning. What about the overall market though? It's been a fabulous January. We haven't seen this kind of a month in the last 16 years or so. Do you think the party will continue next month as well in the run-up to the budget?
Look, so far this rally has been more driven by liquidity factors and the fact that globally I've seen some amount of risk appetite improving. It's not as if India has done anything right, to benefit from that. It's just that lucky that we actually got smashed down quite badly towards the last 2 months of last year. And as the risk appetite improved globally, India has obviously participated in a big way. Of course, the rupee appreciation has improved the dollar returns quite meaningfully. This year to date, we are looking something like 17-18% returns in dollar terms. So that's pretty fantastic. Having said that, if this rally has to continue, I think then India has to start doing a few things on its own. We cannot just hope for liquidity to continue forever and, the market to continue getting related. Ultimately, it's a question of whether the fundamentals are right and earnings are sufficient to support the market. And for that, I think, as I was saying earlier, the governance has to improve in India quite meaningfully from here on, to get back India to a growth trajectory of, 8% plus. If that is the case, then I think the market can sustain or even go up to higher levels. But if we don't see concrete signs of improvement in governance, and when I say governance, it includes factors like fiscal consolidation, major reforms which have been lacking for some time, power sector reforms in particular. So if we get those few things going, then I think this market can get related further.
So Sanjeev, give us some color on the participants present on the sidelines of the conference. What is it that you're picking up after the sharp run-up that we've seen in equities this month? Are investors turning cautious considering the rally has been purely liquidity-driven and not backed by fundamentals?
It's too early to say because it's been just about a month, and I think people have been a little bit caught by surprise as to the speed of the rally. I think late November, early December, the valuations had corrected to pretty reasonable levels, especially for if you exclude most of the stocks in the consumer, pharma, technology and private banking space. Most of the stocks were at very reasonable valuation. In fact, some of them are discounting pretty much in distressed valuations, bankruptcy scenarios, etc. So you have seen a fair amount of rating from there on, but at this point in time, I think investors would need some more assurance about the earnings numbers in particular, and general levels of improvement as far as the macro factors are concerned, including some softening in interest rates, inflation coming down, fiscal deficit being brought under control, some improvement in the BOP position. So if all those things are visible, in the budget you see some signs of fiscal consolidation, etc., then I think people will continue to take a more positive view. But if we don't see any signs of turnaround as far as governance is concerned, then I suspect, this market could stagnate and investors could again become a little bit more cautious on India. So, as I was saying, it's more now to do with India and how quickly we can get our act right once again.
Sanjeev Prasad, after this interview at the Kotak conference, if a client walks up to you for one large and one small cap or mid cap stock idea where you're reasonably confident of a 20% appreciation in next 1 year, how would you address that query? Well,
as far as large caps are concerned, if you look at the 30-50 names over there. A fair amount of them are reasonably getting, I would say, fairly valued. Some of them can give about 12 to 15% return. I would put things like ITC, Infosys, TCS, Wipro, Coal India, Reliance in that bracket. So you have a bunch of stocks which can easily deliver between 10 to 15% return. Large cap industrials names we are still not comfortable with. Some of the metal names seems to be still reasonably valued, I would think. But you have a whole bunch of stocks, I think, where if you see any improvement in, say, policy issues or addressal of any specific company-related issues, then you can see a meaningful rating from here on. And I would probably put stuff like Sterlite, for example, Hindalco, even Coal India, ONGC in that bracket, where if the governance improves in the sense in the policy related matters, particularly with respect to Coal India and ONGC improves, then you can see a 20-30% upside over there, particularly in case of Sterlite. If there is visibility on bauxite mines being available for Vedanta Aluminum or coal being available for Sterlite Energy, then that stock can easily go up beyond the 150 rupees. Our fair value is 155. So there are still stocks which can give you a meaningful upside from here, but clearly you have to see some specific improvement in either macro issues or company specific issues over there. As far as mid-cap names are concerned, I think many of the stocks in the media space seem to be quite okay. The valuation are reasonable, long-term structural growth should be quite strong, and these are pretty good domestic cyclical plays. So whenever you see ad revenue starting to come back, revenue should surprise on upside, and also given the fact that digitalization is finally taking place at a fairly aggressive pace now, you could see some significant returns over there. Other stocks which we like in the media and the mid-cap space, I would look at something like Apollo Tyres, that is.
Sanjeev, also throw some color on the companies that you're profiling at the Chasing Growth conference this time around, and how many fund managers are present. Is there a lot of excitement to invest into India?
We have 90 companies and about 20 odd speakers. About 400 investors have registered. Excitement is the buzz which we saw in 2007, 2008 is obviously not there, but people are sort of revisiting India, looking at what has changed so dramatically on the negative side over the last 2 years, and whether valuation sufficiently factor that, and whether you are seeing any levels of improvement now in fundamentals, macro issues, governance, which can again lead to some amount of excitement coming back to India. So as far as overseas investors are concerned, it's more a case of revisiting India for them after maybe 1 or 2 years of absence. The domestic investors, anyway, they know India pretty well. They have been looking at stocks and companies for a fairly long period of time on a consistent basis. So I won't say that the buzz is there as we saw in the middle part of the last decade, but as I was saying earlier, if India gets its act right, I don't see any reason why the excitement should come back to the Indian stock markets.
But if you have to compare the mood and participation, what you saw at Kotak 2012 versus Kotak 2011, how would you rate the sentiment?
Difficult to say, because I think even last year, same time, things were actually looking quite bleak. If you remember, in January, the market had corrected quite significantly last year. And this time around, even though the market has gone up, actually, if you look on a YOY basis, we are still down from last year's level. So I don't think the sentiment has changed too much, because the overall macro factors haven't really changed too much. Yes, we are all anticipating at this point in time that inflation, interest rates will start moving down, and there will be some fiscal consolidation and so on and so forth. But I think we have to, wait and see some visible signs of improvement over there. So I think people are still a bit on the cautious, guarded side, I would think.
Kotak 2012 different from Kotak 2011, and at a time when 4 or 5 investor conferences are on, how is the Kotak conference different? Because just about every conference is showcasing pretty much the same names. Why are you different?
Honestly, for conference, it's very hard to differentiate yourself. It's a necessary evil of the broking business, to be honest with you. Just about everybody does it. It's the same set of companies. But all we can say, it's our conference we look at, we have 90 companies, which is fairly large compared to what you would see in most other conferences. Other thing which I think is unique to the Kotak conference to some extent is the quality of speakers. We have 3 days of speaker sessions. We have 3 into 8, 24 speakers. And if you look at, you have a who's who of India Inc. and, I would say thinkers as far as Indian economy, etc. is concerned. So that is what I think many people come to listen. Companies you can normally meet on an everyday basis, but to get some amount of inputs and quality of thinking from some of the leading thought leaders as far as India is concerned, that's what probably people look forward to in a conference of this scale.
Okay, Sanjeev, good to have you on the show.